Something strange is happening in financial markets right now. Bitcoin is falling, stocks are falling, gold is falling, silver is falling. And for most investors, none of this makes sense. Because we are told that gold is a safe haven. We are told that Bitcoin is digital gold. We are told that stocks and commodities don't always move together. And yet right now, almost everything is getting hit at the same time. So what exactly is going on? Has something fundamentally broken? Or is there a much bigger story unfolding behind the scenes? Today, we're going to break down what's really happening. Because this isn't just a crypto story, this is a liquidity story, and understanding that difference changes everything. But before we dive deeper, if you are interested in crypto, Bitcoin, and the future of digital finance, hit subscribe and follow me on X. Now, let's get back to today's topic. The biggest driver behind moves like this is usually leverage. For months, investors peeled into winning trades. Gold reached history highs, silver went almost parabolic, AI stocks exploded higher, crypto leverage reached extreme levels. Everything looked unstoppable, until it wasn't. Once prices begin breaking important levels, a chain reaction starts. Stop losses get triggered, liquidations begin, margin calls appear, algorithms start selling. And here's the part most people don't understand. When a fund receives a margin call, it doesn't sell what it wants, it sells what it can. And the easiest assets to sell are usually the most liquid assets. Bitcoin, gold, silver, large cap stocks. Suddenly assets that have nothing in common start falling together. Not because they're weak, but because somebody needs cash and needs that cash fast. At the same time, another major force is pressuring the markets. Bond yields are moving higher and the dollar is strengthening. This matters more than the most people realize, because higher yields mean money has a more attractive alternative. Investors can earn more simply by holding government debt. That pulls liquidity away from risk assets, and when the dollar rises, global financial conditions tighten. The result: pressure across markets, pressure on crypto, pressure on metals, pressure on growth stocks, pressure on almost everything that benefited from abundant liquidity. There is another factor that nobody likes to talk about. The market became extremely comfortable, maybe too comfortable. Everyone was bullish, everyone was expecting higher prices, everyone believed the trend would continue. And that's usually when markets become vulnerable, because the moment positioning becomes overcrowded, even a small shock can trigger a massive move. Markets have a way of pushing consensus, and what we're seeing right now looks very similar to a classic leverage flush, a move designed to force weak hands out of the market before the next major trend develops. Here's the most important observation. When Bitcoin falls alone, that's a crypto story. When stocks falls alone, that's an equity story. But when Bitcoin, stocks, gold, and silver all fall together, that's usually a liquidity story. History has shown this repeatedly. During moments of extreme stress, investors stop asking, "What do I want to own?" and start asking, "What can I sell?" For a short period of time, cash becomes king. Everything else becomes a sort of liquidity. The biggest mistakes investors make during moments like this is assuming that falling prices automatically mean a broken market. That's not what it looks like. What we're witnessing appears to be a classic liquidity event, a leverage reset, a forced deleveraging cycle, and temporary scramble for cash. And those moments often create the most confusion because people focus on price while ignoring the reason behind the move. The market isn't asking whether Bitcoin works. The market isn't asking whether gold failed. The market isn't asking whether stocks are dead. The market is asking one question: who needs liquidity right now. And until the question is answered, volatility is likely to remain high. But once liquidity stress begins to fade, the market will start focusing on fundamentals again. And that's when next chapter begins.